Today's topic is the election about to take center stage. That's the main point I want to talk about. And on my bullet points on slide 2, Biden leads in the polls, and that's pretty much known that Biden leads in the polls right now. But the betting markets see it closer than the polls, and investors align with the bettors. Now, I'll give you the bottom line here on this. This is unusual. Right now, if you look at the poll analyzers like Nate Silver, 538, he gives Trump, and I always try to express everything from the incumbent point of view here. He gives Trump about a 20% chance of winning the election. The Economist forecast gives Trump about a 13% chance of winning the election. The betting markets give him a 42% chance of winning the election. And I'll show you some statistics when I get there. The investor community seems to be almost perfectly aligned with the betting markets. So if you believe that the polls are right and that this is essentially an over race and that Trump is going to lose, then there is some discounting for the markets to do because they have not completely discounted a Biden victory right now. That is unusual, especially when you get to October. Most of the time, as I've always said for the 15 plus years I've been using these betting markets, they usually say the same thing as the polls. And the benefit of the betting markets is they react faster to things like a debate or an October surprise. But this year is a little bit different. It might be a legacy of 2016. There might be some other issues. I'll talk about those when we get there. Who's better for the markets, Trump or Biden? Oh boy, that's like kind of getting into somebody's religion right now. That I've tried to stay away from the politics, and I've always tried to focus on the horse race right now. But I do think that the consensus is Trump is more pro-market. Biden might be pro other things as well too, but Trump is more pro-market. And then I'll end this section talking about his approval rating in the generic ballot, because those measures are showing something a little bit different. They're a little bit more pro-Republican than we're seeing out of Trump's balloting. Maybe that gives out a chance that the Republicans can hold on to the Senate, and that is very close. And I've got some charts on that. Then I want to talk about another risk in the market, a second wave coming out of Europe. Europe seems to be clearly having a second wave. Will it lead the US? That's the big question. Are we seeing the beginnings of this in New York City? Yes, it's jumped in the last few days, but these things are not that noisy. Excuse me. When they jump, they tend to go. And probably the worst spot in the country, and this gets to the first one, is Wisconsin. Wisconsin is having a big time problem right now. So is North, South Dakota, Minnesota, up in the northern plains states. Wisconsin's a swing state, and they're actually worried that they're going to run out of hospital space. It's getting so bad in Wisconsin. I'll show you some stuff when we get there. Maybe that affects the first part in the election, and if so, we'll have to figure out how. Q3, Q4 are going to be record breakers. Q2, Q3 are going to be record breakers. Q2 is the worst quarter ever, minus 31%. Q3 is going to be the best quarter ever, positive 28%. So let's look at Q4, and I'll tease it for you right now. 2 months ago, 3 months ago, the consensus opinion of economists was it would be plus 11% on GDP. It's going straight down, and it's plus 4%, and it's continuing to slide lower. So that gets to the high frequency alternative data. That is still remains stalled, as I've been talking about on these calls. The economy's now reversing, but it stopped recovering about 6 or 8 weeks ago. It's just been stalled at this level, and that's why I think you've seen the economists slowly recognizing this by taking their fourth quarter GDP numbers. Today is the first quarter. Today is the first day of the fourth quarter, from 11% down to 4% and keep falling. Valuations remain high. If you want to buy this market, one of the arguments I do not think you can use is valuation. That's okay. The markets can fight valuation for a long time. And then I wrote, as of yesterday, the bond market remains asleep. Maybe we're starting to see the beginning signs that it's starting to wake up. There's a 7 handle on the 10-year note. I know, what's that? What's a 7 handle? It's been a while since we've seen that, about 3 weeks or so as well. All right, let me dig into this. Let's talk about some of this stuff. First of all, I'll start with the slide on 3. This is the Real Clear Politics averages of the national polls. And I've always given this the caveat to this, that this is the statistic everybody looks at. And I understand it, and that's why I'm leading with it. But it's probably the least important statistic that any pollster or any political science